Hey everyone, welcome back to the channel. Today, we're diving into Amazon's Nasdaq AMZN latest earnings report for Q1 2025, and let me tell you, it's a big one. Amazon's total revenue hit $187.8 billion, a 10% year-over-year increase, but the real showstopper, net profit skyrocketed 88.7% to $20 billion, the fastest growth rate in years. With AWS and digital advertising leading the charge, Amazon is becoming more profitable than ever. But is this growth sustainable? And with Amazon issuing a lower than expected outlook for Q2, should investors be concerned? In this video, we'll break down the numbers, analyze Amazon's major business segments, and look at what's next for this tech giant. Let's start with the big picture. Amazon's Q1 2025 earnings came in as follows. Revenue, $187.8 billion, up 10% Net profit, $20 billion, up 88.7% Earnings per share, EPS, significantly improved. This massive jump in profitability comes from higher margin businesses like AWS, cloud computing, and advertising, while its e-commerce growth is slowing down. According to Bloomberg, Amazon has been aggressively cutting costs while investing in AI and cloud infrastructure, leading to better profit margins. Meanwhile, the Wall Street Journal highlights how AI-driven ad targeting is making Amazon's ad business more lucrative than ever. But despite this strong performance, Amazon's guidance for Q2 was weaker than expected, leading to short-term stock price fluctuations. 1. AWS, Amazon Web Services, the growth engine. Amazon's cloud division, AWS, continues to be its most important profit driver. Q1 AWS revenue grew 18% to $25 billion. AI-powered computing and cloud services drove enterprise demand. AWS remains the largest cloud provider, ahead of Microsoft Azure and Google Cloud. Morgan Stanley predicts AWS will contribute over 60% of Amazon's total profits by 2026. So even if e-commerce slows down, AWS will keep Amazon's cash flow strong. 2. Advertising, Amazon's hidden cash machine. Amazon's ad business is on fire. Q1 ad revenue jumped 26% to $14 billion. AI-powered ad placements increased conversion rates by 20%. Amazon is challenging Google and Meta in the digital ad space. According to CNBC, Amazon is becoming a dominant force in advertising, potentially becoming the world's third largest ad platform in the near future. 3. E-commerce, slowing but still strong. North America revenue grew 8%, but inflation is impacting consumer spending. International revenue grew 7%, but currency fluctuations hit margins. India stood out with 20% plus growth, making it Amazon's fastest growing market. Even though growth is slowing, Amazon's e-commerce division remains a key cash flow driver. Challenges: macroeconomic uncertainty, inflation and interest rates are impacting global consumer spending. Regulatory scrutiny, the US and EU are increasing antitrust investigations, which could lead to fines or structural changes. Competition, Walmart, Microsoft, and Google Cloud are all gaining market share. Growth opportunities, AI-powered cloud services. AWS is positioned to dominate AI infrastructure, with projected 15-20% growth per year. Advertising expansion, high-margin ad revenue, could become Amazon's next major profit center. Emerging markets, India and Brazil have huge growth potential, with e-commerce penetration still relatively low. So, what's the bottom line? Amazon's Q1 earnings were strong, with AWS and advertising driving profitability. Short-term stock fluctuations aside, its long-term growth potential remains solid. If you believe in cloud computing, AI, and digital advertising, Amazon is still a stock worth watching. But what do you think? Will Amazon stock keep climbing? Or is there trouble ahead? Let us know in the comments. And as always, Don't forget to like and subscribe. See you in the next video.